morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, this video is being filmed on February 9th, which is Tuesday night, for trading February 10th, Wednesday, 2010. Traders, this is our 547th video, baby. Now build it up. Make sure you watch them. All right, traders, lots to talk about here. First off, Monday in the United States is President's Day. Exchanges and banks are closed. That brings us to a 3-day holiday weekend, and 3-day holiday weekend reversals are abound. Traders, you've heard enough of these videos. This is what I'm alluding to here. We've been going down in the S&P, down in the euro currency, right? To name two markets, up in the dollar index. Well, now that we're getting into Wednesday and there is a 3-day holiday weekend coming up, Monday being closed, you will see markets begin to reverse. S&P go up, euro currency go up, dollar go down. It usually is a phenomenon that takes place in the last couple of days leading into a 3-day holiday weekend. And then when we get back to work on Monday night into Tuesday, everything kind of goes right back to where it was going, back into their natural trends. So in other words, I expect a couple of up days now in the S&P and euro currency, and maybe down days in the dollar index, and then everything straightens itself out come Monday night into Tuesday. So that is a holiday reversal. Again, traders, you've seen many of these holiday videos. You know that this does happen more often than not. In fact, just about every single holiday we do get the reversal movement. I can think of one or two that it didn't actually happen. I think we're seeing it already, which prompts us to have a green army on the board for the ES. Traders, I never thought I'd be saying it this week. There's a green army on the board. Indicators are pointing straight up. There is a formation which is mostly bearish but needs a little upside before it's completely formed. And I think that upside comes Wednesday, Thursday, maybe a little bit on Friday, leading into the 3-day holiday weekend. Very interesting. So, keep it in mind, President's Day Monday, 3-day holiday weekend, which means 3-day holiday weekend reversals are abound. And with that in mind, traders, I have two series of charts to show you. I'm going to show you the S&P and its corresponding indicators. Then I'm going to show you the euro currency and its corresponding indicators. And that's it. I'll let you off the hook after that. All right, traders? So with no further ado, let's go to the charts. Okay, traders, the first chart we are looking at this evening is the Emini daily bar chart, the March contract. Here you have the Omni proprietary moving average. We have been below that, making us on most days sellers of rallies. We also have this bear flag forming. Here's the flagpole created by this day, the day under the flagpole, and right here. Boom, boom. Here's your flagpole. Here is your flag that's forming. That is a bearish formation. However, traders, we're sitting right here, right now, as I'm doing this video, at the bottom of this flag. The flag itself only has 2 days in it. It doesn't look fully formed, so it looks like it's going to rally up and hit the top of the flag, and that's our target for today. We're looking to buy a dip down here and kick it out when it gets up here. We are going to be very cautious with our trading because we'd rather be selling the market than buying it. But we are technical traders, and when there's a technical setup, you must go with it. Traders, we're sitting right here at the bottom of this line, and wait till you see the indicators I'm about to show you. You'll understand why, even though it's a bear flag, we're looking to buy for 1 day into that bear flag. Then, of course, we don't trade the next 2 days because of the 3-day weekend, so I think we're going to catch a little bit of upside on Wednesday. Now, traders, one more thing to keep in mind. See the bear flag being created right here? Note that we just got below the Omni proprietary moving average and started to create a bear flag. Why I want you to remember this is the euro currency will be coming up next, the EC. You will see on the EC chart that after getting through the Omni proprietary on the downside, it created a big bear flag and broke even larger. Now S&P is below the Omni proprietary, creating a bear flag, and it probably will end up all the way down at some point. However, we are day traders. We're taking this 1 day at a time. Here's our reason for buying it right here at the bottom of the flag, expecting to hit the top of the flag. Now let me show you the indicators that go with the S&P. Remember, this picture right below the Omni proprietary is a bear flag in S&P. Keep it in mind when we do the currency look. All right, traders, let's go look at some indicators here. Okay, traders, right off the bat, slow stochastics wrapped around the S&P daily, and they have hooked, crossed, and are now pointing up, which means there could be a possibility of an up day, even if stochastics only go this high and come back down. That would be enough for a buy day trade. So it looks like we're compelled to be buying the dip only on Wednesday, looking to sell into the rally by Monday, Tuesday. Okay, traders, so stochastics are pointing up right now, and you got to look at that as bullish. Let's look at a few more indicators. Okay, traders, again, the Emini S&P daily bar chart, and you are looking at the DMI, Directional Movement Indicator. When the green or positive is pointing up towards the red, and the red or negative is pointing down towards the green, as this situation is right here, that is a bullish day trader's signal. Another bullish indicator to go along with thinking the S&P will get to the top of that flag. Let's look at a few more indicators. Okay, traders, sticking with the E-mini S&P, here we are now looking at the RSI, Relative Strength Index. This little oscillator right here, this little formula that sort of moves it around, has it pointing straight up. The market movement now has it pointing straight up. Yesterday it was pointing down. As of Tuesday's close, it's pointing straight up. Another reason to think we're going to have a bullish day on Wednesday. Let's look at one more indicator. Okay, traders, we are looking at the CCI, or Commodity Channel Index, and once again, bullish as of Tuesday's close, looking for this to go higher on Wednesday. So as you can see, the technical indicators wrapped around the E-mini S&P are calling for an up day on Wednesday, as is completing that bear flag. So I think we're going to get some buyers in here on Wednesday. So now that you've seen the S&P, remember that we got below the Omni proprietary on that S&P bar chart, and then a bear flag started to get created, the one that we're in now? Well, let's go take a look at the euro currency and see if you see that same thing going on. Okay, traders, we are now looking at the euro currency daily bar chart. First thing I want you to keep in mind is right here where the euro currency broke down through the Omni proprietary moving average. Look at the first thing it did. Flag pull, flag, and then the breakdown. The first thing it does after coming down through the Omni proprietary is create a bear flag, and then a final breakdown, which now we are in another bear flag, just as the S&P is, right? The euro currency looks the very same way. It looks like this day is going to want to come all the way up to here tomorrow and hit the top of its flag before finally next week heading right back down again after the 3-day holiday weekend reversal. Interesting thing on this chart is that right here, the bear flag was created right after you got lower than the Omni proprietary's moving average. Same thing going on right now in the S&P. We just got below the average and are creating a bear flag. You see what the end result was for euro currency. Same look we have in the S&P today as we have in the euro currency. And the euro currency, we are also looking to buy a dip. And let me show you, not only because we're expecting the flag to fill in, but the technical indicators are very strong as of Tuesday's close. Let's go look at some technical indicators. Traders, I'll go quickly through these indicators. You are looking at the RSI, or Relative Strength Index, clearly pointing straight up, right? No doubt that is pointing straight up. That is giving us a buy signal for the euro currency. That's RSI. Let's look at another. Traders, once again, looking at the euro currency daily bar and its indicators. This is slow stochastics. Nice, clean hook down here with a double-legged bottom. Looks to me like it wants to move higher. Another indicator pointing towards the upside, plus the bear flag looking like it wants to be filled in, making us move a little higher. And the 3-day holiday weekend reversals all tell us that that's probably the right move to look for the upside euro currency for Wednesday. One more indicator here. Okay, traders, the last chart I'm going to show you this evening is one more indicator of the euro currency, and clearly the CCI is in buy mode right now. Commodity Channel Index clearly in buy mode. As you can see, it's pointing straight up. Its 2 percentages have crossed right here. That is a bullish signal for trading on Wednesday in the euro currency. So there is my technical picture, traders. Please pull your own charts, please do your own homework, and never ever accept anybody's recommendation unless you have done homework on it and you agree with it. So, traders, you see those charts? That is my technical picture. That is my argument for 3-day holiday weekend reversals out of nowhere. Bearish markets become bullish, bullish markets become bearish. It lasts a couple of days and boom, right back to normal on Monday into Tuesday. That is what we're expecting in the indices. Those charts are there to show you that. If you are getting buy signals as well, you can see why. Indicators are pointing towards the upside. That flag needs to be filled in. Couple of reasons at least why the market might have a little bit of a rally. Then on top of it, you got the 3-day holiday weekend reversals. Lots of reasons to think a couple of up days coming our way. So traders, we will be buying a dip if it sets up. I am not just charging at anything. If it does not set up, I will not go near it. But we are looking to buy dips in euro currency and S&P for 1 day. That would be Wednesday. If you want to find out where those trades are, kindly come on down to our site. It's www.livewithoscar.com. Jump into the free chat room. Take a look at what we're doing. Look at the way we give lessons when we hold them. And take a look at our trades for the day so you can prepare for where you would like to get in and out, especially if you agree with our recommendations. All right, traders. I don't think there's going to be any more trading that will take place this week. Possibly a little bit on Thursday, but maybe nothing. I do not like to trade going into those 3-day holiday weekend reversals. I prefer to wait until Monday and catch the reversal going right back to the way we were going. But I will trade on Wednesday because it looks like Wednesday's the start of it, and that should be a clean day to catch a little piece of it. All right, traders. If you don't get a video from me in the next couple of days, surely I'll be looking at you over the weekend. I'll be looking at all my homework and all my charts, and hopefully we'll get a nice weekend webinar out for you. If not, we have 547 of these videos for you to see on YouTube. If you're uncertain where you found this video, come on down to www.youtube.com/futuresanalysts. When you get there, subscribe to our videos so that you know when we put out another one, and they come out almost every night. And there's a lot of good tricks, a lot of good tips, and a whole bunch of great technical analysis explanations in these videos. And they will certainly help you become a better analyst, which will make you become a better trader. So watch our videos, pay attention to these lessons. I don't do these lessons for me, traders. I know this stuff already. I do these lessons for you. So please come on down and please take a look at our videos. All right, traders, a stop is your best friend. I don't care if this thing goes up, down, or sideways tomorrow. Do not trade without stops. Put your stops in first. Always, always have a stop in. It is your only safety net if something goes wrong. Your electricity goes down, your internet goes down, you lose your mind, whatever might happen to you in a trade. If the stop's not in, you are exposed and you have unlimited damage potential. Please make sure you trade with your stops. All right, traders, I'm getting out of here. Give me calling time there tonight, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is? Subs are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.